Welcome everyone today's session. My name is Mohammed Shanti, a market analyst at EGM Securities and FX Beza. In today's session, we will be deeping dive into the markets with me, your market analyst. And just before we start, let me remind you with a risk disclaimer. Please understand that all kind of information that we provide here are educational and not for the purpose of providing a management or let's say investment management or even investment advice. All of these information are only for educational purposes, so you can use it and learn from it in your own trading. So what happened in the markets today? A lot of things happened, especially with the Russian and Ukraine talks. So we saw stocks jump as Russia changed their tactics, and also the gold slumped. This is the major thing that happened. So the mood surrounding the war in Ukraine has kind of lightened up as Russia announced it will reduce its military action around Kiev and Chernihiv, north of Ukraine. A few hours ago, talks between the Ukrainian and Russian delegates ended. It was the first face-to-face talks that were held since March 10 from this year. It basically, despite the fact that the conflict is still carrying on, the sentiment is in an upbeat. There is improved sentiment because the negotiation were viewed as positive. So at this stage in this time frame of the war, a lot of let's say we can say a few people are predicting a quick end to this violence that happening in Ukraine. But for sure, today's meeting could be the start of a process that leads to a ceasefire. If you look at the Germany's DAX, the DAX index, you could see it hit levels not seen prior to the Russian invasion war. All right, so this actually highlights that drastic shift in the sentiment. I'm going to show you the DAX on the MT4, and I'm going to show you what I mean. So basically, we are seeing a huge change or bouncing back from a bearish sentiment to bullish sentiment in the European markets. So it's really important to have a look. Speaking of the European markets, if you check the euro dollar, for instance, it's going higher due to the news that came today. So the euro dollar is driving higher to the news about the Ukraine-Russian war. And as you know, out of the major currencies, the euro was the hardest hit because of the conflict, because of the political tensions. But however, since these political noises are now being a little bit positive, the euro is literally benefiting from this shift. A lot of traders dumped their safe havens and went to the euro because the euro is having a lot of demand now. So speaking of safe haven, gold is being left out in the cold as traders are keen to buy riskier assets such as stocks. This can be seen on all major indices such as the DAX and also other things. From another perspective, we can look at it is that the news that Russia is the fact that they are changing tactics. The appeal on gold has fallen as equities are proving more are being more popular now. So dropped the precious metal gold dropped below the 1900 mark just before returning back again to the 1950 mark. And it's important to remember that the US dollar is also suffering from today's news. As a result of the euro's rally, you can link it out. But that still couldn't prevent a dramatic decline in the yellow metal. So even though the US dollar is going down, also gold is going down. The gold is basically priced in with the US dollar, and whenever the US dollar is going down, usually gold goes up. However, that's not the case today, because gold is considered as a safe haven. And since a lot of traders are leaving this precious metal, leaving, let's say, the safe haven the safe haven item, they are going back to riskier assets. Speaking of commodities, we have also another bearish day for oil, as you know. You see the oil earlier last month, let's say, we can say it hit a 14-year highs amid the concerns of the supply chains, as you know, the ban imposement and so on, and the disruption of supplies actually affected the WTI and also Brent crude oil. So, and since Russia is a major exporter of oil, and there were kind of worries that the Moscow administration might actually squeeze some output as a way of hitting back against these sanctions. So especially the sanction imposed from the US and the Western governments. So there was some kind of concerns, and we saw that oil was reaching a 14-year-old highs. So I'm going to show it to you. The last thing that I want to talk about is also the Australian dollar is basically the weaker across the board compared to the other currencies from the forex arena, especially because of the metal side. There is a kind of correlation between the Australian dollar and also gold. So going for I'm going to show you the charts. So if you look at the chart, we will start with the Dow Jones. The Dow Jones index. So starting with the Dow Jones index, you can see the sentiment have changed in the past 2 to 3 daily sessions. This is the 4-hour chart. You can see the price of the index actually reaching the 35K, and currently reached the 35,381 mark. So from a technical perspective, you could see prices are literally above moving averages, changing the sentiment when it was below the moving averages, and now it's going above it, which indicates that maybe bulls are taking control, and we could see the index continue going higher. Now, the moment the news came, we saw prices. If you look at this 4-hour candle, you can see the prices actually went higher. However, now it's bouncing back up, but still the major trend is, we can say, is bullish. This is confirmed by who? By the MACD. If you look at the MACD indicator, the MACD indicator, you could see the two lines are actually crossing above the zero area, which indicates that the bulls are in control. We saw this also on the stochastic. However, we are seeing a small retracement happening across over to the downside, maybe a mixed performance from the indices, stating that maybe we are seeing a small minor retracement happening, but it doesn't mean that prices gonna go down all the way down. No, it could mean that maybe prices could settle around this area until we see a breach of an important resistance level, which is the 35,381, already recorded in today's session. If this price got defeated, okay, we could see prices all the way to the 35,871 mark, the nearest highs, and the next, the 36 mark, so psychological mark. So this is the main points for the Dow Jones for today's session. So let's say that the prices went down, let's say the sentiment turned off, and traders went back again to the safe haven due to, let's say, assuming maybe some political tension got increased and so on. The main level to see for the bearish trader is the 34,563 mark. This is an important support, a short-term support, and a defeat of this level, it could mean that prices will go below the moving averages, and they will tackle the next moving average of 33,927 mark, which is an important support area. So we can see this area is a support area and also a previous resistance area. So this is a very crucial zone to look out for. Usually traders, especially the short-term traders, aim for these areas as their let's say, scalping strategy. So this is on the 4-hour charts. If you look at it at the 1-hour charts, you will see different story basically. So the moment we see prices all the way back here to the 34 mark, we could say that the bullish trend has ended. Other than that, the prices could continue higher. So going to a different market, the European market, as I told you, the DAX has changed its movement, or let's say the sentiment. If you look here, there is a huge movement to the downside happening in the past month, especially it was confirmed because of the inflation, also because of the war that happened. But now the sentiment is going higher. The DAX was one of the hardest hit because of this war. And now you can see the sentiment is going higher. Prices are trying to defeat the moving average on the 4-hour chart. Now, the next level to watch for is if prices were able to stabilize or to stay stable above the 14,750. So if we look at it from this way, 14,750, it's really important for bullish traders. A stability beyond this level or a follow through, the next level could be the 15,672 mark. This is for the medium long term view. Especially the MACD gave us a bullish sentiment indication, and also we saw a lot of crosses to the upside above the 50 mark from the stochastic, confirming that the prices are going higher. Also, we are seeing a minor trend line happening over here. So all of that confirms that prices could continue to higher and higher. Now, from a bearish side of view, prices must go below the 14,332 to end this bullish uptrend. We could see prices tend to move in a narrow range between the 14,750 and the 1,400 mark as a range trading. However, a continuation above this level, we could see prices all the way to the 15,600 mark. That's a really good, let's say, number of points that traders could aim for. Another thing we need to look at from the European market, if we look at the euro dollar. So the euro dollar tried today to defeat a really important resistance level, which is the 1.1130. Now, the euro dollar is currently standing at the 1.1082. So it actually defeated a short-term, rather important short-term resistance level, which was the 1.10. If we look at it here, 1.1046, one spot 1046. We saw prices defeated this level and immediately went all the way to the levels of 1.1130 in a very short-term moment. And then we saw prices are retracing back, maybe because traders are already have priced in the effect of the war. Now, the war didn't end, but rather it's giving us hints what's coming in the future. That means we could see a ceasefire happening or even the war ending. Now, another major factor that away from the geopolitical tension, the fact traders are pricing in interest rate hikes from the ECB in this year. So 4-year hikes could indicate this. Whenever the interest rates going higher, this actually gives more value for the local currency, so more strength in the local currency. And this is what happened. Traders are pricing in the expectations of 4 rate hikes coming this year. So this is why we saw prices actually stopped its latest bearish movement over here. And with the war, with the news of the war, we saw a really huge candle for our candle to the upside. Now, this is a major resistance level, must be defeated. If it was defeated, the next hurdle for the bullish traders will be the 1.1195 or the 1.12 psychological level. Still, the stochastic is showing a bullish momentum, still not in the overbought territory. Also, the MACD is changing its course from ranging markets to almost to bullish sentiment. This indicates that maybe prices could continue to the upside in the medium and long-term view. If you look at it at the 1-hour charts, this is what's going on. Basically, the MACD is telling us that there is a bullish sentiment confirmed in the 4-hour chart, but this huge resistance level must be defeated. So short-term traders could actually aim for this as a short scalping selling trade and aim for 20 or 30 pips. Long-term traders could wait for this breach and then take a trade to the upside. Now, they need to see a defeat of this level first. Once this is defeated, that's a confirmation for major movement to the upside and maybe a new trend in the long-term view. So a new trend to the upside. So what's the next level for them? It will be this high, which is the 1.1277 next. Okay. From the downside, let's say prices went back again below this 1.1046. Prices could continue its bearish momentum that happened before and try to defeat this bullish trend line and aim to the 1.0945. A defeat of this level, prices could continue to the downside even further to this low of 1.08, probably one spot 08. So these are the levels for the euro dollar. It's very important to have a look at them. Always use your chart, always use the chart and your analysis. Check if your analysis is compatible with your risk analysis. If they are compatible, you can make a trade and so on. So this is something we always recommend. Always use your stop loss, always use your take profit levels and your risk, and try to apply risk strategies. All right. Going to the commodities world, starting with gold. Gold saw a huge movement today. Gold have been sliding just before, even before the news, even before the Russian-Ukrainian war news, the peace talks that happened. If you look here, you can see prices actually went from the 1937 or 1937 and reached the 1887 mark in a really fast way. This is after the news, but the momentum to the downside happening. This is confirmed from what? The stochastic. Look at the stochastic. We are seeing an oversold territory over here happened, and then prices continued its bearish downtrend. It went back again above the oversold territory, while the MACD just crossed the zero line to the downside, indicating that the bears are in control now. And we are seeing almost head and shoulder, let's say combination, or actually a kind of a setup, trading almost a head and not perfect head and shoulders. Now we need this price to be defeated completely, which is the 1900 mark. The 1900 mark represents a huge support level. At the defeat of this level, we could see a continuation to the downside, not to the 1887 mark, even more. So this was a test, basically. This test need to be confirmed again. If prices were able to defeat the 1900 mark, we could see prices all the way to the 1800 mark again. So this low first, and then the next one. So 1842 and then 1818. That's in the medium long-term view. Now, how can the gold go back again? From a technical perspective, it needs to defeat two major points. The first one is the moving averages represented at 1956. The next one is the 1965, the latest highs. At defeat of this level, we could see prices all the way back to the 2070 in the short term, in the medium long-term view. Now, in the short-term view, on the hourly chart, or even if we look at it at the 30-minute chart, we need prices all the way back again above the 1937 and then next to the 1956. So 1937, it's a really crucial area in the short-term view. 1937, above this level, we could see prices continue to the upside. Now, we could see the continuation to the downside happening, especially if you look at it here, there's a downtrend happening, and a downtrend line. So we could see prices continue to the downside. Now, a breach of the 1900 is required first. Going to oil prices, the last thing I want to talk to you about is the oil. Oil has been moving in a bearish downtrend. If you look at the 4-hour charts, you could see that there was a head and shoulder formation happening, and there was a breach. A breach of this formation indicates a bearish momentum to the downside. Now, it can be confirmed by, if you look at it from this perspective, a high, a lower low, a lower high. What's next? Maybe a new lower low. So what's important in the long-term view? A defeat of the 92 mark, and first we need prices to defeat the 98 mark, then next the 92 mark. If this happened, we could see down, up, down trend happening. So a high, a lower high, a lower low, and then next a lower high, and then a lower low. So the first wave, second wave, and the third wave. So this is something that a lot of traders should focus on. So the main level to be defeated from the downside, it's the 98, and then next will be the 92 mark. If prices continue to trade above the 98 mark, we could see prices continue to range between the 105 and the 98 mark. Now, what should traders, the bullish traders, wait for? A defeat of the 107 or 108, basically. A defeat of this level, we could see continuation back again to the 116. This is in the medium to long-term view. Now, is the bears are in control, or are the bears are in control, or is it the bullish traders? Basically, we are seeing the MACD telling us that no, the bears are in control now, and we could see continuation to the downside happening. However, the main level to be defeated is this mark, which is the 98. However, the stochastic is giving us another bearish, let's say another view. If you look at the stochastic, you can tell there is this formation happening. So a high, a low, a high, a lower high, a lower low, a lower high, a lower low. Now there is a high, we could see another lower low. So this can be a confirmation to what's happening on the chart. So maybe wait for prices to defeat, or let's say the stochastic go above the 61 mark. That means prices could continue to the upside. If the stochastic goes down, we could see prices all the way to the 98. That's a trick you can use by looking at the stochastic in this way. Okay, and this is it for today's session. I want to say thank you a lot for your time. Please stay tuned for more live sessions about what's going on in the market, deeping dive of the market, or about the US Open opening, and so on. Stay tuned, and thank you so much for your time. Have an enjoyable night. Thank you a lot.